Hi everyone, welcome to today's video tutorial. In today's session, we would be preparing journals from a given set of transactions. A quick recap of what we have learned so far. We've seen there are three types of accounts: personal, real, nominal. We've also learned the golden rules of accounting. We've discussed the function of a journal and the format of a journal. In today's video, we would be learning how to go about journalizing a given set of transactions applying the golden rules of accounting. Let's look at this question together. The question says, pass the journal entries for the following transaction in the books of ABC Traders for April 2020. We've been given a few transactions of ABC Traders and we're expected to prepare the journals for April 2020. There are 6 transactions which have been given to us, and these 6 transactions we will have to journalize them into the books of accounts, which is journal. Let's look at the format of a journal now. Right over here, I have the journal format. On top, we will have the header. Then we have the date. We will be recording the date of the transaction. Particulars column is where we will be writing down the details of the transaction. LF means ledger folio. Debit is where we will be writing down the debit amount. Credit column, we'll be writing down the credit amount. Now, let's go about the preparation of the journal for this particular transaction. Right on top, we will be preparing the name of the firm, which is ABC Traders. The first transaction is on 1st of April. On 1st of April, it says purchase goods for cash. So the two accounts are purchase account, debtor, and the amount is 8,000, to cash account. Purchase account is a real account representing the goods that you're purchasing, which is your raw material. Cash is again a real account which represents the cash that you have. When you purchase goods, goods would be coming in and cash would be moving out. Since both these accounts are real, golden rule for real account is debit what comes in, credit what goes out. So purchase account is being debited and cash account is being credited. Now we are expected to write the narration, being purchase of goods for cash. Let's move on to the next transaction. The next transaction is on 2nd of April and it says purchase goods on credit for Amar Traders rupees 20,000. Here the transactions, the nature of the purchase that you're carrying out is a credit transaction. Now how do we know it's a credit transaction? A, it is mentioned to us in the transaction itself. Second, the name of the person with whom you're engaging the transaction, which is Amar Traders, that is also being mentioned. So in such case, what would happen is we would be using purchase account, debtor 20,000 to Amar Trader account. Now Amar Trader account is personal because it is representing a person or an organization. And the golden rule for personal account is debit the receiver, credit the giver. And Amar is giving. So we are crediting Amar account. Being credit purchase from Amar Traders. So with that, we have completed the second transaction. Now let's move on to the third one, which is on 3rd of April. It says sold goods for cash. Now, when you sell goods for cash, cash would be coming into your business. And cash is real and goods would be going out. Now the goods which are going out are basically your raw material, which is represented using sales account. Sales account is again real, debit what comes in, credit what goes out. Let's write the narration for this, being sale of goods for cash. 4th of April, let's look at the transaction together. On 4th of April, it says sold goods on credit to Asif. So since you're carrying this out on credit, we will be using Asif account. And Asif account we know is personal, debit the receiver. So Asif is receiving, and Asif is receiving goods worth 15,000. This, and you will be crediting sales account. So to sales account amount is 15,000, being sale of goods on credit to Asif. So the fourth transaction we have completed. Now let's move on to the fifth transaction. Fifth transaction is purchased furniture or bought furniture. Now when you buy furniture, furniture would be coming in. So furniture is real, debit what comes in, so which is 2,500. 2. When you buy furniture, you would be paying it for cash. So cash would be going out. Being purchase of furniture. Next transaction, which is the last transaction on 6th of April, it says paid wages. When you pay wages, you will have to take into consideration wages account. Wages account is nominal. Golden rule for nominal account is debit all expenses. When you pay wages, cash would be going out. So to cash account, being payment of wages. So with that, we have completed this particular transaction.